if you introduce spot Bitcoin and spot ETH ETFs into a rising market, you will start to suck in the investment advisors, the individuals who found it too complicated to hold their own wallets and do all of that kind of stuff. So it really depends what the market is doing. But I think on balance, it's positive, but really it'll show up in 2024, 2025.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin. Raoul Pal says, on the off chance that you present spot Bitcoin and spot ETH ETFs into a rising business sector, you will begin to suck in the speculation councils the people who found it excessively muddled to hold their own wallets and the entirety of that sort of stuff. So it truly depends what the market is doing. Yet, I think on balance, it's certain, however, it'll appear in 2024-2025 when the cycle's completely in progress. It simply makes a simple way for individuals who are not used to the computerized side of things to simply utilize values and get their openness. Indeed, look in general, longer term, it's exceptionally certain it's simply one more entrance. Present moment depends what the cost is doing. The cost areas of strength for is get somewhat of a frenzy in from the venture councils and stuff like that. And lots of things Raoul Pal discuss, so please watch the video to end and share. Subscribe our channel, Everyday Finance, thanks.
Crypto spring obviously comes after winter, and it's after all the terrible news comes out. And if you think of spring in terms of weather, one day it can snow, then it can rain, then it could be sunny, then it could be warm, then it could be cold again. It's kind of a weird time. But over spring, generally, the weather gets better. And that's what we see in crypto. So you get still bad news stories, but the market doesn't trade as badly around them. It tends to go up over time, but it's a bit frustrating because it trades sideways for long periods of time. And then suddenly it goes up in 2 days and then goes sideways and then corrects again, that kind of thing. And that's the environment we've been in. But if you actually step away, if I look at my screen now, Bitcoin's up 72%, ETH's up 45%, and Solana's up 140%. So actually, it's been a good year, just hasn't felt that way yet. Depends how they're going to use it. So they can be investors in it, which is great because if you think of crypto as an economy, it needs money coming into the economy, right? Because it can't just be us retail lot, because we've all got our money in the economy. It needs to get new money. So that's why it's part of this global liquidity cycle. So when people get liquidity, they start investing in riskier assets like crypto, and it starts flowing. So that adds liquidity to the market overall, which means that new projects get more traction, and it filters through the whole ecosystem. So money, like in any economy, this digital economy needs capital coming in. So that's what the institutions bring, but the institutions are also building on top of this. Everybody from Fidelity to Franklin Templeton to, I think it's Apollo. Somebody else announced today that I think it's UBS are building a mutual fund on Ethereum, tokenizing it. So what they're going to bring is use cases. And the finance system is the largest use case of all because it's vast. So that's another thing. Also, the institutions tend to invest in VC, so they're funding the new wave of projects. So if we think about it, about 62 billion went into VC investments in 2020 and 2021 and 2022, or 2020, 2021. That money got put to work by thousands of entrepreneurs who are building new applications, new opportunities. And that's what the space needs as well, because we've got this great technology, but technology is not enough. It needs to get to user level. What applications can we use where we don't even see that we're using crypto? So that's why institutions are really important. Also, it's important because things like ETFs allow investment advisors to allocate people's money. So it's not just like Goldman Sachs putting money in. It's actually all of our money, our savings and investments and that kind of thing. So it allows people to participate in this in ways that they couldn't participate before because it was harder for them via investment advisors or financial advisors to actually access tokens. But this, when it's an ETF, they've turned it into an equity, essentially. Yeah, I speak to a lot of the institutions, both directly with my work at Real Vision, but also with my asset management company, Exponential Age Asset Management. And we've found that it's the latter, that everybody has pretty much done the homework. The pioneers just keep working through the bear market, again, Fidelity, Franklin Templeton, a whole bunch of these guys, Texas Teachers Retirement System, they've been involved all the way through. Most other people have done the work. So actually what they need is liquidity and price. So there's not much liquidity around now that we talked about before. So if nobody's got much money, then it's difficult to invest money. But as the stock market start getting closer to all-time highs, people start making money. Let's say that eventually the Fed cut rates, well, then money starts coming into these kind of assets. So I think most people have done the work on it now. They understand it. And so I think we will see a lot of participation from institutions in this cycle, much more than last cycle. There was quite a lot last cycle, quite a lot, but it was a lot of family offices last cycle. This cycle, I think we'll see a lot of the pensions, endowments, stuff like that. I like it. I like the team at Van Eck. I know them really well. Jan Van Eck is a friend of mine. Their heart is in the right place. They understand what this whole system is about. And really what they're saying is we understand that a futures ETF has less impact on the ecosystem than actual spot Ethereum ETF. So therefore, we just want to give something back to the spot market. Because don't forget, if people are actually buying Ethereum and they were staking it and doing all of this stuff in spot, you've got a much more impact in the space. Because futures, yes, the arbitrageurs will try and keep the price in line. So it does create demand for actual Ethereum, but not necessarily as much demand because people can just trade the futures themselves. So I think the Van Eck team are really trying to do the right thing. And listen, it's bigger than all of us. And we need to allow others to participate and help shape it. If people want their bags to go up, well, they want the institutions to build in this space too. If you want Ethereum to be worth $5 trillion, well, then you're going to need the finance system to use Ethereum for settlements and smart contracts and everything else to get there. So, yeah, it's a good thing. So the other thing about Van Eck is they even have a hedge fund that just solely invests in crypto assets.
Okay.
So they're really in this space. I mean, they're properly in this space. They've got NFTs, they do everything. So they're really trying to put their best foot forward in the space and be good stewards of the space as well. So from what I understand, they're not getting rejected for no reason. They're actually getting rejected because I think it's either the CME or the CFTC needs to have some component part, and that part needs to be approved and finalized. And it's actually just that. So it's not like, oh, Gary's trying to slow the whole thing down. There's actually one of the component parts of all of these ETFs that require the kind of validation. I think it's from the CME or the CFTC. I'm not sure which one. Probably the CME. That bit needs to come into place. So they're just buying time to get that done. So I still think it happens this year. It depends what price is doing. Because had we have launched a spot ETF in November last year, nobody would have bought it because the market was going down or it was feeling terrible. But as the market is recovering and we're in spring, and normally the Q4 is a strong quarter, if you introduce spot Bitcoin and spot ETH ETFs into a rising market, you will start to suck in the investment advisors, the individuals who found it too complicated to hold their own wallets and do all of that kind of stuff. So it really depends what the market is doing. But I think on balance, it's positive. But really, it'll show up in 2024, 2025 when the cycle's fully underway. It just makes an easy way for people who are not used to the digital side of things to just use equities and get their exposure. So yeah, look, overall, longer term, it's very positive. It's just yet another on-ramp. Short term, depends what the price is doing. Price is strong, we'll get a bit of a panic in from the investment advisors and stuff like that. From the work that I've done, if I look at the rate of change of the adoption, the active addresses, it should hit 1 billion this cycle. So what is that? How do we get there? I don't know. But there's a lot of things that people don't even know about, like Ticketmaster has issued 30 million NFTs. People don't realize that. So that was 30 million people who weren't crypto people, but because their Ticketmaster wallet, where they get their tickets for games and shows, they just drop NFTs into them. So, I don't know how we're going to onboard the billion, but it feels like it's coming. It could even be, dare I say it, CBDCs. if somebody launches one. It could be from India, where they're working on their CBDC. So there's a lot of different avenues that will create the billion people. I mean, look, we're both talking to each other in different continents, using different Wi-Fi, using different service providers, on different computers, using different microphones. Everything works and we don't even know and don't care. Mm-hmm. Neither of us care what technology we're on because it just works. We just click on Zoom, talk. So that's how all of this will work in the end. Layer 2s are cheaper, faster. So that works. So, Polygon, Arbitrum, all of that stuff, that probably works very well. And so I think we will see ongoing adoption of those. Only some of the value accrues to ETH because they batch transactions. So they take a whole bunch and then it goes onto the ETH chain. So you're using kind of one ETH slot for a lot of other slots. So it has an impact on ETH. It's good. More people are building on ETH. So that's great. I think that continues. Solana, I think, is going to be the big story of this cycle of the main chains because they're launching Fire Dancer or Jumpies, which is a different validator, which actually, I mean, believe it or not, is going to run at 600,000 to 1.2 million TPS. So this is the fastest thing by a long way. Considering Solana and Polygon are the two fastest chains at 65,000 TPS, and Sui should be about 120,000, but yet to get there. This is just a different order of magnitude. This is 10x the fastest ever thing we've ever seen. And it's not a layer 2, it's just Solana. So this is a game changer. It means the whole finance system can be built on it. It was designed by Jump Trading, who are high frequency traders who understand the latency and sheer capacity requirements for things like exchanges to run. So I think Solana is a very big story. We're seeing a lot of activity there. Then I don't know what the new Solana will be, but we're seeing a lot of interest both in gaming. Oh, I've got my reactions coming up for some reason. Both in gaming and also in zero knowledge stuff. And there's also DeFi. So I don't know. It becomes really hard to know which is the big area. But those are the three I hear a lot. But I tend not to go that far out the risk curve just because it's difficult to choose the right thing, But, you figure that if the space is going up, then Bitcoin and ETH will do well and Solana will do well. Solana's got this extra kicker, which is, I think, potentially a game changer. So I think that's probably the layer one that does, the big layer one that does the best in the cycle. Then we've got the kind of Aptos and Suis and those kind of things. Let's see how they do, what traction they get. The layer 2s will be interesting. And then these other kind of applications, as I said.